Hello, good afternoon, and welcome to HYCM's online trading workshop with myself, Giles Cochran, the Chief Currency Analyst with HYCM. As we get started into the workshop, I just want to greet people and say hello as people are coming in. Let's just see who we've got coming in. Ooh. Oh, there we go. Hi, Aaron. Hi, Ashik, Joseph, Mayamiko, Van, Troy. Good to have you on board. If you could just say that you can hear me okay using the questions panel on the right-hand side. Oh, yeah, that's super. Thank you very much. Hi, Aaron. Yeah, good. I'm glad I'm coming across loud and clear and you can hear me okay. Oh, that's super. Just as we're getting going, I just want to go through the disclaimer that we're looking at today. Just to make it clear that the different scenarios and trading setups that we're looking at today won't be trading advice. It's just very important that I get that across. Particularly with these workshops, the idea is to use them in such a way that are practical and that they're helpful. So we will be looking at specific entries, specific exits. Hi Nadir, good to have you on board. But again, that's not trading advice. The idea behind these workshops is that they're for your education, so that when you look at these workshops and when you attend them, you start to see how you can make trading decisions for yourself. So if I just could ask you to open up your demo accounts, and we'll be looking at different situations and setups during the day. So it's going to be helpful if you can have your accounts up and open so that we can look at things in detail. Just wanted to say that before we get going. Just want to outline the session ahead. What we're going to be doing is we're going to be looking at a practical way of putting into practice some of the theoretical trading skills that we learn on a weekly basis through the FX week ahead and through the general principles of how to trade effectively. Now, oftentimes people will explain, how to trade, but what they don't explain. Oh, sorry, I just turned my squawk off. Sorry about that. That was a squawk, and we covered that last week, but I'm just going to turn it off while I'm on. My apologies for that. The special topic that we're looking at today is how to use bank trade recommendations. You'll often see banks give recommendations, and I'm going to show you how you can use those bank trade recommendations to help you with your own analysis. You shouldn't just blindly follow something that a bank suggests. So what I wanted to do is just to outline one bank trade recommendation that we're going to use as an example, and then we're just going to see general principles of how to use it and some of the pitfalls and dangers that there are with using bank trade recommendations. So that's going to be our special topic today. And before we get going, please turn to your handout. If you go to the right-hand side of your GoToWebinar control panel, you will see a handout. Now, if you just go there, you can see the workshop guide is there. Hang on a minute, I'm just going to put a better one for you there. And just bear with me while I quickly go to this. I've got the wrong handout, but if you open that workshop guide at March the 12th, my apologies, I won't bother putting the correct handout in, but if you open that workshop guide, it looks exactly the same as the handout that we'll use today. It's just that the special topic that we're looking at is bank trade recommendations. And I will briefly recap on headline news trading. So I did it last week. It was really helpful for Brexit negotiations, and it's still really helpful for this coming week. So we will look at that very briefly as well. This is the handout that you need to print out. And if you have this by the side of your trading desk each day, it's going to help you go through the practical things that we look at. So we're going to be looking at looking back, looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. These are the kind of 5 principles that I've chosen to put it into a practical way of how to remind yourself each day how to trade effectively until it just becomes second nature and you're no longer needing this handout. You just, it's just, this is just what you do on a day-to-day basis. But especially when you're learning, especially when you're getting set up, you'll want to have this. So if you just print out that handout and have it by the side of your desk, keep it open for now, and we'll refer through it during the whole session. Okay, so let's just close that. So the first thing we want to do before we get going is remind ourselves that if you have a topic that you particularly want to see covered, just email it to me at giles.cochran@hycm.com. If there's anything you want covered, want to understand options expiries, want to understand, how to trade pivot points, so anything sort of technical or even fundamental. I don't understand what the latest bank statement from the Reserve Bank of Australia means. Anything that you want help with, just email me. That email comes directly to myself. And so if there's a topic that you really want covered, you can have that covered there. So that's just by way of introduction. So before we do anything else, let's turn to your handout. And here's a copy of the handout here. And if you turn to that, open it up, and what we're going to do, we're going to start by looking back. Now, when we look back, that's always the first thing we do when we turn to the financial markets. We always want to see what's happened, because the market is always responding to what's happened. It always, is thinking, how do I respond to the new information that we've just had? So that's why we always look back, because by looking back, we understand how the market is likely to move in the next few sessions, etc., etc. And we'll be looking at that. So when you want to look back, you want to look back on the last couple of sessions of market activity. You just want to get into a habit where you can know, without a shadow of a doubt, you can know what the mood of the market is. Think of the market like a person. Some people have good moods, some people have bad moods, and if you think of the market in that way, it's going to really help you better understand it. And you're going to see that there's bullish moods, there's bearish moods, and when you understand that mood, then you're in a better place to start analyzing and anticipating what the market is going to do next. So the idea of this workshop is I'm going to practically look through this, how you go about doing this on a day-to-day basis and putting some things together. So the first thing we want to do now is we want to look back. So we're going to try and do this. We're going to try and do this together. We're going to try and read up on the last two sessions of market activity and try to identify key market sentiment. So as I'm going through some of the major news developments over the last couple of sessions, keep thinking to yourself, what mood is the market going to be in as a result of this? Okay, what mood will the market be in as a result of this development? And we're going to start first and foremost off with an Asian session. We had news coming out that Theresa May was going to request a 9 to 12 month Brexit delay, according to the Sun newspaper. Now I'll explain what happened here. There's a speaker in the House of Commons, which is the United Kingdom Parliament, called John Bercow. He is in charge of making sure that political business is carried out in a specific manner. He basically, he's almost like the referee between the different political parties. And, he decides who can speak, who can not speak, is proper procedure being taking place. And what John Bercow ruled, he said that Theresa May could no longer bring her deal to the UK Parliament for the third time. What he said was that Theresa May has brought the same deal to Parliament twice, and that is not allowed under UK law. So he said Theresa May will not be allowed to bring her deal back to the UK Parliament for a third time. So in other words, what John has done is he's managed to kind of prevent Theresa May getting another opportunity of her Brexit deal being voted through the UK Parliament. So it's very significant what he did. And as a result of what John Bercow has done, this has meant Theresa May will have to apply to the European Union for a delay to Brexit. at least 9 to 12 months. And I've just heard on the wires that she's looking for a delay until June, with she's asked for an end date of June the 30th, with a provisional delay of up to 2 years. So this is new, and this is breaking news, that Theresa May will officially be requesting, she's about to write a letter to the EU today asking for an extension. And this delay could be up to 2 years. Now, whether the EU accept the extension is another matter, but we'll come and deal with that later. But that, for now, that came out in the Asian session. So if that's come out in the Asian session, what mood would the pound be likely to be in that situation? What mood would we expect the pound to be in? Have a go. How would you think it would affect the pound if there's going to be a delay to Brexit? What do you think? Have a go. Yeah, that's correct, Nadir. Yes, that's right. If Britain delays the exit of the European Union, the market takes that as positive for the pound. Partly because if there's a delay to Brexit, it also makes it less likely that Britain will leave the European Union. So a delay is seen as a positive thing for the United Kingdom. So just to be aware that that's the reaction that's going to be seen in the pound when this delay comes into view. Now, this is obviously the short-term reaction. It's the short, medium-term reaction. This is why the pound has been rallying, because a no-deal Brexit has seemed less and less likely in recent months rather, and weeks. So particularly in the last sort of 3-4 weeks, that idea that there is no or a lot less chance of a hard Brexit has been stabilizing the pound, and that's what we saw in the overnight Asian session. We saw some more strength in the pound on this kind of headline. Okay. Now, there was also the report that the European Union will offer a delayed date. They said they can potentially offer to July the 1st or possibly further. But it says that the EU leaders will likely suggest to May, who will need to agree to the offer when she meets in Brussels on Thursday, that there could be a 3 or 9 month extension to the Article 50 period if she manages to get her deal through Parliament next week. Okay, the 9-month option will require the UK to hold European elections in May. So what Theresa May is now trying to do, she's trying to get her deal through Parliament next week, at the same time asking for an extension. So if she doesn't get her deal through next week, she's not forced into a situation where Britain has to have a hard Brexit and has to come crashing out of the European Union. So that's what Theresa May is trying to organise and try to arrange at the last minute. She's saying, what the European Union is saying is that they are prepared to offer a delayed date, okay, at this stage, but we'll see how this story develops through the session. So Theresa May then requested the 9 to 12 month Brexit delay, and then the UK official came out earlier in the session of the Asian session, saying a meaningful vote unlikely this week. Now, originally there was meant to be a meaningful vote this week. It was meant to be today, when the UK would have another vote on Theresa May's Brexit deal. But because of what happened with John Bercow, because John Bercow said Theresa May can't bring the same piece of legislation to Parliament for a third time, that is why the meaningful vote is unlikely this week. So that's put a real delay. This now means focus goes to next week. That is when Theresa May is likely to give another chance at accepting her deal. But remember, John Bercow says, we can't accept the same deal. So the pressure is now on to Theresa May either to ignore John Bercow and try to push it through anyway, or to come back with an alternative deal. So we can see it's in quite a balanced situation at the moment going into the Asian session. Now, the Asian equity markets were quite choppy and there wasn't much change on the day overnight. We had the Australian indices just down minus 0.1%, The Nikkei been choppy and just down 0.1%. Same with the Hang Seng, and then the Shanghai Composite was down minus 0.4%. As a general rule of thumb, when indices are down 1%, that's when they tend to have more significance in terms of their implications for a risk on or a risk off markets. So this is very much a waiting market. Okay, so the overnight Asian indices were waiting to see what was going to happen. We also had the Reserve Bank of Australia monetary policy meeting minutes. And what I wanted to show to you was at this point here, particularly 1, 2, 3, 4, 5. And it was here when the minutes said that the Reserve Bank of Australia was waiting to resolve tension between a solid jobs market and soft GDP data. So in other words, the Reserve Bank of Australia, what's happened to the Reserve Bank of Australia is that they've said that the economy is not developing as well as they'd hoped. They revised some of their growth forecasts, and one of the brighter spots in the economy was seen as their solid jobs market. Now, remember, so the central bank now is focusing on the Australian labour market. So they're saying that's where their focus is on. So this week we have jobs data coming out at 12:30 midnight GMT time. So what that means is we can expect that jobs labour market to have a significant impact on the Australian dollar. Why? Because we know that the central bank has said that they are interested in that data. So remember, they're focused on labour data. Because they're focused on labour data, when the labour data comes out, if it's a surprise, there's going to be a strong reaction on the Australian dollar. Now, the rest of the minutes were there was nothing that was a particular change that took place in the Asian session on the Reserve Bank of Australia monetary policy meeting minutes. It was as expected, and there wasn't anything particularly new. The only thing to say, remember that these minutes were before the fourth quarter GDP data miss. So there was a miss in the fourth quarter GDP data out of Australia after these minutes were released. So that's just worth being in mind. So it means that solid jobs market, I've highlighted it there. If there is a disappointment with the jobs market, then we can expect to see the Australian dollar sell off quite sharply. So that's a reaction that's worth waiting around for, because you may be able to get you might be able to get a trade out of that situation. You might be able to short the Australian dollar if the jobs market comes out at a miss. So that's something just to be aware of. We'll have a look at it as we look ahead to what's going on for the rest of the week. And also wanted to just bear in mind that the Australian government bonds, their yield for 3 years is now below the 1.5% Australian cash rate. So in other words, with the bonds, which is basically like a loan from the government, they're now yielding less than the Australian cash rate, which means they're expecting the cash rate to fall. Okay, so this is a good indication that the Australian government bonds are not giving as good a cash rate as you would typically expect, and the fall in the Australian government bonds yield lets you know that the markets, this is the key takeaway for you guys, the markets are becoming convinced of rate cuts coming for the Australian dollar. So we're looking at a bearish outlook on the Australian dollar. So that's just something to be aware of, and particularly the jobs data. But don't worry, we'll come back and look at that in a little bit more detail towards the end of the session, so you can be prepared in advance for it. Let's have a quick look at the Australian dollar US dollar pair. I'll just call up the trading terminal, and we'll have a little look at the Australian US dollar pair, and I'll just show you the key levels that we have in play for the Australian dollar US dollar pair. So let's just open up the Australian dollar US dollar. There we go. And if you look over here, so this is the daily chart. So on the daily chart, we saw that price rejected the 50 exponential moving average. Now that 50% exponential moving average is going to be quite a key zone. If you also look at the trend line that comes down from there down to here, you can see that this area here is a key resistance level. So going into the jobs data, we can expect that to either remain support or resistance. So say, for example, there's a really poor jobs data and it looks very bearish for the Australian dollar, then a very key place to define and limit risk on a sell would be to have your stop above the 100 exponential moving average or even above this trend line here. So that's just an area to really look at. And also remember, the big round numbers are significant. So we've also got this 0.71 100 level coming in there. And we've got the 0.71 400 level coming in there. So these areas here are quite significant. Also, don't forget, we do have the Federal Reserve meeting on Wednesday, and their outlook is for a more dovish outlook as expected for the Federal Reserve. So you have to remember that pair. But once Wednesday's gone and once Thursday's jobs data has come, then we may be in a position for a trade on the Australian US dollar pair. Just wanted to highlight here is the key resistance level, that descending trend line, 50, 100 exponential moving average above, and there's clear places to define and limit the risk in that pair. Okay, turning back. So now coming to the US dollar, the US dollar index was subdued. Now that kept below 96.50. The dollar index is a good handy tool for seeing what the direction of the dollar is. And one interesting thing to note is that the expectations are that the Fed is going to cut growth, expectation for the Fed to cut inflation and dot plot forecast too, and the expectation is for the US dollar to weaken. So just going into the Federal Reserve, we can see that the expectations are for a more dovish outlook for the US dollar. Now that doesn't mean that it will happen, but it's just key to be aware that they're the expectations going in to that rate meeting. So be forewarned and forearmed that we may see dollar weakness between now and tomorrow, okay? Just seeing some more Brexit headlines coming up. UK government sources pushing back very hard at idea that Prime Minister will suggest 2-year delay to Brexit. And EU's Donald Tusk says discuss uncertain political situation in London as well as preparedness for a no-deal Brexit with Irish PM. Yeah, lots of headline trading going on for the pound at the moment, so that's where risk is heightened for the pound. OPEC headlines, in case you missed that yesterday, we had some quite influential OPEC headlines. OPEC's decided to end their April Vienna's meeting from the agenda. They've decided to cut it and instead plan one in June. So the April Vienna OPEC meeting has been cut, and instead there's going to be one in June, and they're going to be weighing the current production cuts. In case you've missed it, what OPEC has been saying is that they've been reducing production in the production of oil amongst members of OPEC. And there's been a 95% participation rate in those cuts. In the past, although OPEC have talked about cutting rates, the participation rate hasn't always been very high. But now there's been a good participation rate. 95% of people are cutting the rates. We also have Venezuela production cuts because of the political uncertainty, unfortunately, in that country has meant that they're not able to ship, they're not able to produce as much oil, and we have Iran is under US sanctions, and so we have production cuts out of Iran as well. So you put that all together, we've got Venezuela, Iran, and OPEC's cutting oil production. So for you guys, just to test you, with those things happening, what would we expect the price of oil to do? What would we be expecting the price of oil to do given these headlines? That's right, Aaron, Nadir, perfect. That's what we'd expect. We expect oil to be supported. And that's exactly what we're seeing at the moment. We are seeing oil being supported. Let's just have a quick look at the chart here. I'll just show it here for you. Nice oil chart. Yeah, well done, guys. That's good work. Okay, so we see price is just approaching that resistance, that pivot point, R1 pivot point, just around 60 handle. Okay, here on the daily chart. Now, when we had that news out yesterday, so here's the 19th, we had it out on the 18th yesterday, we saw this support. We saw the support was here around that 100 exponential moving average. And, you know, a sensible place to have entered long on that good news would have been around these prices with your stop just below the pivot point here. And you can see an obvious place to take profit was that pivot point. And you can see there's profit takers going on there as people have taken their profit as price moved up into that and that level. Also look at the 15-minute chart, see how that played out yesterday. So it's 19th. So you can see price yesterday was rallying around this pivot point. Once it broke through the pivot point, moved up to the top level, and then it's supported on that top pivot point there all in the overnight session, and then has made the next pivot point the next day. So that's just to be aware. Once you get that positive sentiment, what you want to do is then you want to find logical places to enter the trade. So there, you know, looking on a long oil position would have made a lot of sense, and you can use the pivot points, the exponential moving average, you can use that for your entries and your stops. They're very sensible places to enter. Okay, so that's just a story that's worth following and worth keeping yourself up in. Yeah, well done, Chubivan, you got that as well. Well done, guys, that's really good work. Okay, the European session, and once again, it's Brexit headlines that have been major focus again for the European session. Real focus. The UK Brexit secretary came out at the start of the session. He was saying, you know, to bring back a third vote, we need a shift from lawmakers. In other words, there has to be some fundamental change before a new third vote can be brought. They said they'll discuss Brexit at Cabinet. They also said the Speaker has said not be bound by precedent. Speaker has raised the bar with his ruling. The Brexit Secretary, Stephen Barclay, is not very happy with the Speaker. I remember John Bercow, he really wants Britain to remain in the European Union. And by preventing Theresa May's deal being brought to Parliament, it means that Britain is, on paper, more likely to remain in the European Union because they can't physically go to government, to Parliament, to get it voted through. So that's a big issue. We had jobs data out, labour data out for the UK this morning at 9:30 GMT. Now, interestingly, those data release came about 12 minutes early. There was some kind of slippage, or they said there was some functional leakage on the, on the method for releasing the data. But either way, it was 12 minutes early that the data was released. And one of the things to be aware of with the pound is one of the most widely spread data points that there is in the world. You know, there's only a certain number of people who can have access to these sensitive data points before they're released. Obviously, you can understand because it's so valuable to know data points before they come out that only a very select and small group of people are generally allowed to know the data. Now, but the UK, I think there's about 100 different people who get access to this data before it's released. And that's quite a lot of people who actually get access to this data early. So it's been studied before that UK data releases, often price tends to move in the direction of the data release just before it happens. So that's just saying that UK data can be quite leaky. We also saw the situation with a data release out of Canada 2 weeks ago, where the release was accidentally put on the website 45 minutes early, I think. And so some traders got 45 minutes advance notice of the data point. So just to be aware, when you're trading, accidents, mistakes, things happen. And that's just because it's part of being human, isn't it? Making mistakes and, oh, well, pressed the wrong button. Those kinds of things happen in the financial market. So you just have to be aware of that as well. And I was actually going long into this data release because I was expecting it to be a good data point. I've done a little bit of research on it. I was expecting it to be a good reading, and I was surprised. I suddenly saw, oh, hang on, the data came out really quickly, and it took me by surprise. So just to be aware, it can take you by surprise as well. So make sure you've always got a stop in place, because you never know what the market's actually going to do. Okay, and there's the yeah. Sorry, that was just okay. These figures were very good. You know, the average weekly earnings plus 3.4% versus plus 3.2% expected. So excellent, excellent data point. Unemployment rate was very good, like underneath 4%. That's historically low levels for the UK. Very good unemployment rate. Got employment change, 222,000 versus 120 expected. That's good. And the claimant count rate, 2.9%, so a little bit higher on the claimant count rate, but do you know, not a bad set of data. I remember that out of the UK last week, we had the UK January GDP was plus 0.5% here versus plus 0.2% month on month expected. So we are seeing some pretty good readings out for the UK at the moment. So just to be, you know, just to be aware that behind Brexit, the UK economy is doing quite well. So we'll see that later on this week, we have the Bank of England having their rate meeting. Now, they are not expected to raise interest rates, but strong GDP, good wage data, this growth measures influence the coming of inflation, particularly with higher wages. Eventually that's going to be passed on to consumers, and that's going to mean higher prices, it's going to mean inflation, and so that's going to mean interest rate rises. So just to be aware of that factor going on. Yeah, okay, Tribivan, if it's very good data, why is the pound going down? Well, we'll come to that in a minute. Let's look at the release here, and let's have a look on the chart, and I'll talk you through it. The thing to remember, Tribivan, is that with the UK at the moment, what is in major focus is Brexit. Okay, normally this wages GDP data would be the most influential thing on the market, but actually there's a couple of reasons, and this is going to be a very good learning point for you, Trib. So let me explain to you what's happening here in the pound. Right, if you look at the pound, okay, we can see here. So right. So here we had 9:15. This was the data coming out. Okay, you see that large spike heading up into this level here. Okay, so let me just. This is this line that we're coming up here. Okay, now price spiked up to about 1.3280. Okay, now what Tribivan question is if the wage data was so good, why is the pound now going down? Well, here's a good learning for you. Okay, first of all, what is there very significantly between 1.3280 and about 1.3310? There's something very significant there. Who can tell me what is lying in that area? It's a tricky question, this one. I'll be surprised if anyone gets the answer. Give you a second. Well, what's lying in this area here, as I tell you, is actually option expiry levels. There is over $1 billion worth of option expiries at these levels. Now, if you go back to the daily chart here, you'll see this level here has been strong option expiry levels. Now, these are levels that are valid until 2 o'clock GMT time, okay? And these levels act like magnets, and they also act like repellents. So they draw price to them and they repel price from them. So what you're looking for the price action around these option expiry levels. So what happened when the very good data was released? We'll go back to the 15-minute chart. Price moved up into these option expiries levels and then sold off. But then if you notice, what did price do? It then brought back up off this level. Now there was some new news that came out here, and the news here was, we'll cover this in a minute, but it was all about how the EU was willing to grant an extension to the UK. So do you see that was bullish for the pound US dollar pair, and now the market is pricing in that, that is fundamentally a bullish outlook, okay, for the pound at the moment. Because if you think about it, the EU are saying that we're going to allow an extension for the UK, okay? We are allowing that extension. Theresa May is going to ask for extension for up to 2 years. So this is supportive of the pound. Now, there's so many political moves and maneuverings and disagreements and arguments here. The pound is very volatile. So the pound increased on the release of the data, sold off as it hit the option expiry level, and then went back into the level and then sold off again from the top of that level, particularly on the uncertainties regarding Brexit. But the good news for the pound is that Theresa May is asking for an extension, and the EU is willing to grant an extension with some provisos. When you put that together, we're likely to see the pound supported, okay? So what we'll do in a minute we'll look at the charts and we'll see some places where it could be a sensible place to enter longs on the pound as long as this situation remains. But you see, what you have to remember is with Brexit, Trib, it's not just the data that matters. It's also the Brexit negotiations and those headlines that are constantly coming out. Okay, and so I'll just give you an idea of the headlines that are coming out. They're literally coming out constantly. Okay, and I'm just gonna. This is my Reuters feed. These are just a couple of headlines that came out quite just in so about sort of 10 minutes ago. You just had these headlines coming back, and on the Reuters feed, these headlines are constantly emerging. Okay. And so that's something that the market is constantly responding to. And some of these headlines are really significant for the pound, okay? So this is called headline risk, okay? So the pound at the moment has headline risk. Risk is both a risk and opportunity, okay? So I hope that has given you some indication of why the pound has been so volatile this morning. Does that help a little bit? So to see that the way that the pound is moving on that data. Okay, I'll move on. Okay, any questions? Okay, Grace, that's good, Van, that's super. So London session, this was the key move that I showed you. EU leaders to plan contingent offer on Brexit. So they're going to say the extension offer unlikely to be finalised at the summit. Extension will be finalised in days before 29th of March. The plan is to allow for May to try and get a deal through next week. Okay, so the market really wants to try to get a deal through next week. We saw here, this was the data, this was that headline. It was this move here, we saw a move from about 1.3, it was 1.3280 roughly, to about 13310. So we saw a move about 30 points. Okay, that was that move. Okay, but the key thing to see is its word contingent. So a contingent offer means that it's dependent on other factors. So the EU leaders offer a contingent offer on Brexit, and what the kind of sticking point has been with the EU is they say we don't want to offer you an extension on Brexit if you're just going to talk about the same plan. Because what is the point of us giving you an extension on Brexit if you're just going to reject the deal at the end of the extension like you've done already? So the EU are a little bit nervous about giving an extension to Britain, but at the same time they're willing. But notice what the Belgian foreign minister said, and this kind of sums it up, and this is why I put the headline down here. A Belgian foreign minister said that if there's no change from London, then the EU may hold off an extension. So there is a lot of risk. So in other words, the EU is saying, yes, we'll offer an extension to you, Britain, but it's contingent. In other words, it's dependent on you changing, having some kind of reason for us to give you an extension. And then they're saying it's not good enough just for you to put the same deal and reject the same deal again. We're not going to accept that. The DUP talks have been constructive. This is something to really watch. The DUP are the Northern Irish contingent of the UK Parliament. If the DUP agree to Theresa May's Brexit deal, then there's a strong chance of Theresa May's Brexit deal getting through UK Parliament. So if you suddenly see a headline saying the DUP have come to an agreement with Theresa May, then we could see some pound being bought on the relief of that news. I'm also going to show you the pound pair again. There's one little area I wanted to show you because just seeing price is a very, very key part. See, that's the 200, that's the 100 rather exponential moving average, and we see price is rejecting that 100 exponential moving average. So we can see that with the EU willing to offer a plan to allow Britain an extension, the risk of a no-deal Brexit is a lot less likely, okay? So that means that the chances of a deal are quite strong. We can see technically that 100 exponential moving average is quite a good technical area. So stops placing below here potentially look good if the situation stays the same. Remember, this is not trading advice, but this is showing how you put it together. So we can see, looking at the pound pair, because the pound pair has been in incredible focus this week, we can see the EU are willing to offer a contingent offer on Brexit. Theresa May is asking for an extension. There is an outside chance that Theresa May brings her deal next week and the deal gets through. We can see that the Federal Reserve is looking to being bearish on the US dollar. So putting that all together, a pound US dollar long could make sense. Now, over to you guys. Where do you think a good place to look for longs in the pound US dollar chart? Now, I'm going to pull up a chart and we'll look at the 1 hour chart. We'll look at a swing trade scenario, okay? We know on the weekly chart, we can see that the low of the weekly comes in just here, just on that pivot point, so about 1.3150, okay? So going to the 1 hour chart, if we think that situation continues, where would be a potentially good place to go long on the pound US dollar pair? What sort of entry should we be looking at, guys? What technical places could we see? Have a look. So this is the 1 hour GBP US dollar chart. We've got 100 exponential moving average. We've got 200 exponential moving average. Do we have any big round numbers anywhere? Yeah, we do. So we've got the 1.3200 handle. Okay, let me just help you out here. So what we're looking for is once we know a bias for a currency, so we know the bias for the pound at the moment is it looks like the pound is going to be supported in the next coming sessions because the European Union said we're going to offer a deal to the UK to extend Article 50. We know that Theresa May is going to ask for that extension to Article 50. So it looks like any dips are going to be bought on the pound US dollar pair. Okay, 1.3150. Let's check that out. 1.3150. You see, the problem I've got with 1.3150 is you're missing a couple of key points. So thank you for what? Okay, yeah, yes, Nadir, I like that one. Breaking 1.1300. That's an excellent one. Okay, so here we have a couple of yeah, that's a good entry. The break of 1.300 is good. Maybe this high here, 1.3310, going along on that break with a stop below the pivot point. You see, as price is retracing here, I would expect to see some bids appearing here at the 100 exponential moving average and at the 200 exponential moving average. So where would be a good place to enter would be somewhere in this 100, 200 exponential moving average region with your stops, say 1.3170. Okay, that gives enough space, and then potential targets are up here of 1.3, 400, depending. And if there's a deal that gets done, you're looking at this next one here, just underneath 1.3600. So potentially there's a good, it's a trade that's potentially good because it's a good risk to reward, especially if the deal gets done. So, potential longs, again, not trading advice, but this is just showing for education, would be, 1.3250 or 1.3200, just above that 1.3200 handle. So, 1.3215, something like that. Stops 50 points, 40 points stop. That would be a good value place to have an entry. So we'll just have an example. We'll put that in the trading terminal to show how to do that. So we'll look at this one here. We'll go from the 100 exponential moving average, which is coming in at 1.3244, and we'll just put it 1.3247, just slightly above that number there. So let's put that's it. So we go to the pound, new order. We want to go pending order, and the way you put your price in this box here, 1.3250. You put your stop loss here, 1.3170, and then we've got a take profit 1.36, and we place that there. We go down to the 1 hour chart. We can see that we've got our entries there, our stops there, and we know we're playing for these highs up here, which is also just beneath the 200 exponential moving average. So there is, that depends upon everything staying the same. Okay, that's the dependent issue here. Does it stay the same? But that is, a sensible way of analyzing the data. Now, look, this is the outcomes. Will MPs support Mrs. May's Brexit deal? If they do support it, yes, and it gets voted through, then Brexit happens by 30th of June. If Theresa May brings her deal next week to government, it's rejected, then it means that she requests a much longer extension. Now, if that's accepted, then we have to take part in European Parliament elections in the UK. And then will Brexit happen or not? There's definitely a sense that it may not happen, because as soon as the extension carries on, the chances are that maybe a vote in no confidence is called against Theresa May. Maybe there's no Brexit. Maybe there's an election. Maybe Theresa May resigns. Maybe there's a further vote on the PM's deal. There's all sorts of things that can happen. So you can see that there's a lot of uncertainty. And the key thing is that if an extension is granted, it means the chances of a no Brexit are less. So that's why the market is rallying. And at the moment, have had the EU accepted Britain's request, what they're saying is they're basically going to accept it. They're looking very likely at accepting the UK's extension. So we expect the pound to be supported. And this is, Chib, this is for you. One of the things, Chib, Van, what you have to do is you have to allow your trade to breathe. You've got to give it enough space. So if you've got this ultra tight stop, because you could have, and it would have been legitimate. You could have traded, this was the deal for the extension from here to here. Okay, that was the spike. You could have drawn a Fibonacci retracement level and entered a long there and put your stop beneath here, and you would have been stopped out now. Yeah. Or an alternative, you see, is you could potentially enter at this pivot point on the 15-minute chart and put your stop just below the pivot point and then make a move up to the high. So you got to sort of think about it, and that pivot point is the same place as the 100 exponential moving average. But I think there's so much headlines going on. The entrance that makes sense to me is this 100, possibly down to the 200 exponential moving average, stop below the pivot point, and then playing up for these highs. Okay, that's the risk reward that makes sense to me. Going forward, we've covered that. Just wanted, the European session equity markets, the Canadian dollar was the strongest, the Australian dollar was the weakest. Aussie dollar was obviously weak given the minutes out of the RBA last night. We also want to look at equity markets. We covered the Asian equity markets overnight, and we saw that the UK equity markets were broadly rallying in the green. So that was a sort of a general good mood in the market. Looking forward, we could see we're looking at the FOMC statement. The federal funds rate is coming out tomorrow. So just to be aware of that, everyone's sort of quite bearish US dollar going into this meeting. So that is going to have some impact. Remember the CPI data coming out of the UK tomorrow. Again, likely to be overshadowed by Brexit, but remember that the Bank of England are meeting on Thursday. So if Brexit gets sorted, which is not inconceivable, if it suddenly looks like it's going to be, okay, then the Bank of England might start indicate whether they're going to raise interest rates, and the data would suggest that they should. If it wasn't for Brexit, they probably would. Now, we also have the Australian employment data coming out now. This is what I've said to you guys. The Australian labour data is being really focused on by the Reserve Bank of Australia. So there's potential for a trade here. So come along either at the event, have a look. If there's a big divergence, if you've got, a big employment change number and there's a drop in the unemployment rate, that's going to be strong for the Australian dollar, and that should be an immediate buy as long as it's a high number. Now, if it's bad for the Australian economy, then that's going to mean a rate cut is more likely to happen, because they've said that this is one of the bright spots in the Australian economy. And if this bright spot suddenly is no longer so bright, then that's going to be more negative outlook for the Australian economy. Remember those resistant points I showed you. So if you look on the Australian US dollar pair, let's have a look. Where are we? Australian US dollar. There we go. I showed you that descending trend line, okay, in line with the 150 exponential moving average. So this is kind of your line in the sand. So you can use that for putting your stops, use that for entries. That's a good technical place to define your risk. Get above and stay above, it's bullish. Attempt to go above but stay below, it's bearish, and then we're looking to play down the next leg lower in the Australian dollar. So that jobs data will likely be a key mover. It's the combination of the jobs data and the Federal Reserve on the Wednesday. So you need to go along and analyze that so you're up to spec with it. Looking ahead, this was another thing, the big option expiries level that were ahead of the New York cut today. So there's 2 o'clock, we had some big option expiries. We showed you one. So 1 billion worth of options expiring at 1.3290 to 1.3300. That was on the pound US dollar pair. So if you go to that chart, what you can see is that option level really held. See, there it is, the 1.300 option level. Let's just hide for now. Let's get rid of the pivot points. Let's go down to a 15-minute chart. You can see that there was that, that 1.300 level. There it is. Okay, do you see? So trading that option level would have been very sensible today. Just in there, you could have had a stop, maybe a 25-point stop, 1.3325 would have been sensible, and made a play down to the low. The other option expiry level we had, and if you haven't used option expiring levels, look at them. They're just like kind of magnetic points in the market. And when it's above $1 billion, pay attention. Okay. Pay attention to option expiries above $1 billion. This was a good day today because there were quite a few option expiries that were very large. And if I show you the US dollar Japanese yen pair, notice the option expiries is 111.30. These expire at 2 o'clock GMT. You can see them reported pretty much anywhere on the web. Let's look at the US dollar Japanese yen pair, 111.30. I'll just go to that. So there's a 15-minute chart. And you can see that around that level there, what was the exact option expiry level? 113, 140. So this was repelled, that 111.30. So price broke through there, and you could have had, like a 25-point stop on that. And you see price just rejected that level, and now we're going into the New York cut. So after 2 o'clock, these levels are no longer valid. So this is only into 2 o'clock GMT, into the cut time. But that's something to be aware of, those big option expiries. Anything above $1 billion is significant. Okay, looking at the charts, today I kind of did this for you just to show you the work on the pound, and that's something that is quite clear. Very clear cut today. Brexit headlines really taking the news. But obviously, use this pattern for your own trading. What you want to do when you look at the charts is develop a bias for certain currencies based on your sentiment analysis. So you want to really get into it. Which bias? We found that we had a strong pound bias against the US dollar, which is weak. So we're looking to buy the pound on retracements back. Obviously, look at your risk. I don't advocate trading with significant risk. You want to really minimize your risk. Ideally, I recommend trading without leverage so that you really minimize that risk. And here's a good example, how to use bank trade recommendations. Now, bank trade recommendations can be really useful. Okay, now here's a bank trade recommendation that I just got off the website of Ransfork. And just very helpful sometimes. You can see a bank gives good information and good analysis. So here they were just saying, the US dollar was broadly lower as markets eyed 10 a.m. Eastern time factory orders and the FOMC on Wednesday. We saw the Canadian dollar rising within range as higher oil prices offset wider spreads, budgets at 4 p.m. Just going through the different currencies, little reminders of where the different currencies are. Saying pound well supported, just below recent high as markets assess risk of delay. Just recognizing that support in the pound is as a result of the risk of delay to Brexit. So one thing that banks can do is they can give you a quick rundown of analysis, and that is the way that I recommend using bank trade recommendations. Here's one from Morgan Stanley. Okay, so Morgan Stanley is a very famous bank. And this was one of their trade recommendations. I'm just going to have that in, not bold, it's a bit too hard. They were saying, this was a bank trade recommendation, they're saying, looking to buy pound US dollar dips ahead of the Brexit votes in Parliament this week. As our economists know, the base case of a soft Brexit appears to be becoming more positive as a probability that it retains custom union membership increases. Meanwhile, the risks of a hawkish Bank of England remain underpriced. Wage growth continues to rise in the UK, while capacity pressures bite, suggesting potential inflation pressures. And this is where they were long from 1.3083. So this is a historical bank trade. Their target is 1.3650. So if we go and have a look at the chart, okay. So let's just go and look where they were long from, and then you start to see how they've entered. Okay, so they were long from 1.300 level. So you can see, look, they entered at a very sensible place long, because this 1.300 level is a combination of the 100, the 50, and the 200 exponential moving average. Price had a strong reaction off that 1.300 level. This was on the anticipation of a Brexit delay taking place. And if you go to another chart, if you go to the pivot points, you see even more clearly on the daily chart, you can see, just put the pivot points back in, you can see here that 1.300, 100 exponential moving average area. And if you notice where they put their stops, you can see that their stops at 1.2850. So if you go to the chart, you can see, oh, that's a sensible place to put a stop. Look, it's just here, just below the S1 daily pivot point, okay? So, and they're targeting 1.3600, and if you go to the weekly chart, you see that 1.3600 level is just below the 200 exponential moving average. So sometimes you can think, well, okay, do I agree with that trade analysis? What do I think about it? What do I think about where they put the stops? What do I think about the target? What do I think along from? Now, I'm not suggesting, and you shouldn't do this, you shouldn't just go and trade every, you shouldn't just go and trade every single bank trade recommendation, but use them for your analysis. I often read a bank trade recommendation and I think to myself, what do I think about their analysis? Oh, maybe there's a factor that I overlooked. Maybe there's a factor that I hadn't put so much emphasis on. Or maybe you'll read a bank trade recommendation, and maybe when you look at that bank trade recommendation, maybe you'll see something that you disagree with. Or maybe you see, oh, they've forgotten something, they've missed something. So I like to use bank trade recommendations to really confirm or challenge my own analysis, okay? So that's one of the ways that I like to use them. And also I like to see their technical entries. Often you'll see that they've chosen a very sensible technical place to enter. Sometimes just knowing that price is at a really key technical level can be really helpful. So if an opportunity arises, you know where a good technical stop, entry, or target is. One word of warning. Now, this is not so much in the FX markets, but it is more in the equity markets. Every now and then you'll hear of the must-buy stock, you know, the must-buy stock, the secret that no one's known, the deal of the century. Now, some people, there is this phenomena called pump and dump. And what pump and dump means is when you pump up a recommendation for a trade, okay? And you say, I really think you should buy this stock. And the reason you're encouraging people to buy that stock or to buy the currency is because you want to sell it. So you pump it and then you dump it. So do not follow a blind recommendation to buy anything. Never. Because there are unscrupulous people within the market who will talk up a currency or talk up a commodity because they want to get an opportunity to sell that currency or commodity. So that is a warning for you. Make sure that you don't fall into that trap. So bank trade recommendations are good, they're useful, but be aware that sometimes they can hide malignant influences which are bad. So be careful of blind recommendations, but do use recommendations to challenge or to look or to critique or to supplement your own analysis. Okay. Again, trading headlines. I wanted to cover this again because it's so significant with Brexit at the moment. If you've never tried a reliable news feed, you can get a Squawk service at Rand Squawk. I have no affiliation with them. This is just one of the industry's most respected Squawk services. It's called Rand Squawk, and you can get a free trial. So what I suggest to you is, maybe if you're not even going to consider using a Squawk, can I suggest to you maybe sign up for the free trial? Maybe you can get 2 weeks free trial, and with all the Brexit headlines going on, it will give you a really good indication of how valuable a Squawk service can be. So you can go to the website there, sign up, you get a free trial for a couple of weeks, and with all the Brexit headlines going on, this is a really good opportunity to try a Squawk service, and when you try it, you'll see the potential value that it has. Okay, guys, finally, just before we, oh yeah, I say practice on your demo account first using a Squawk. It can be quite a skill trading news. We're quite draining as well, so make sure you demo account practice on that. You certainly want to get, and that way you can train in a good way without being stressed. Okay, the coaching that we do here, don't forget that essential coaching. If you deposit $1,500 into your account, I will be able to give you 1 hour coaching session. So if you wanted to do that, if you're thinking of funding your account $1,500, you get a 1 hour coaching session with me personally. If you deposit $3,000, you get all that's there, get the 1 hour with me, and then you get the 1 hour trading follow-up review. And then with the premium, you get for $10,000 deposit in your account, you get 2 hour coaching session with me, 1 hour follow-up, and the 1 week VIP support, which is kind of asking personal questions, and I can deal with you via email, and help support you as you're looking at the market for an entire week. Okay, guys, it's been a pleasure being with you as always. Thank you for all your good contributions and questions. I'm afraid I haven't got any much longer now. Mohammed, if you want to email me that question, Mohammed, I can deal that for you personally. And my email address is giles.cochran@hycm.com. Thanks, Tribhuvan, that's great. Thanks, Nadir. And I hope you guys have a good week and look forward to seeing you on Monday. Don't forget, on Monday, and it is Monday, March the 25th at 12:30 GMT. We'll have our FX week ahead, and that will be taking us through for the next week. Trade safe, guys. I hope you have a really good week and take care. Thank you. Tribhuvan, it's same time. It's 12:30 GMT time on the Monday. And it's 1 o'clock GMT time on the Tuesday. So, oh, that's great, Aaron. I'm glad you enjoyed it. Keep coming back, guys. And don't forget, Trib, Aaron, Mohammed, Nadir, you want something covered, just email it to me and we can cover something, okay? And we can look at stuff that helps you look. Maybe it's worth looking at option expiries again. For next week, because that's something that can be really helpful, okay, and can stop. I think Tribhuvan, your question, Trib, about why is the pound kind of slammed up against that 1.300 level and just kind of sold off. Knowing about those option expiry levels, that it's over $1 billion worth of option expiries could make you think, oh, okay, hang on, there's going to be some impact. There's going to be some selling pressure most likely there. So, I don't want to necessarily initiate longs from that level. That could have really saved and really helped you out. Okay, guys, take care. Have a good week, and I hope to speak to you soon. Goodbye.